Welcome to Central Highlands Region. In this video, we take a close look at an area that, despite its moderate demographic stats, shows a number of warning signs for the keen property investor. With a population of about 27,836, a median age of 33, and over 13,800 dwellings, nearly 85% of which are houses, the region seems stable on the surface. However, the socio-economic score stands at 7, and nearly half of the properties are owner-occupied, which can limit rental flexibility. Asking prices in recent months have reached as high as around $480,000, adding to the caution for any buyer in a market that appears stagnant. Before we dive into the details, please subscribe to our channel to get the latest insights that empower you with data for every property decision. In terms of rentals, recent data shows median asking rents ranging from about $165 to roughly $494 depending on the month. The yield has flirted between 7% and 8%, suggesting an appearance of strong returns at first glance. Yet the vacancy rate, recently measured at around 1.6%, could also indicate that demand is not as dynamic as it seems. Renting here may offer a superficially attractive yield, but the overall stability remains in doubt given the market's sluggish movement and underlying economic challenges. Looking at the sales market, property discounts have been significant, with figures reaching roughly minus 32% in some recent snapshots, pointing clearly to a buyer's market. Properties are taking on average around 65 days to sell, combined with a days of supply figure near 115 days. The region has seen a flurry of new projects, including infrastructure investments like the Barralaba Power Station, valued at $200 million, the Capella Water Treatment Plant at $15 million, and the Emerald Water Recycling Facility at $10 million. While these projects might sound impressive, many are in the energy and industrial sectors rather than residential. The scale does little to boost household demand, adding an extra layer of uncertainty for those looking for capital growth in a market that is otherwise lacking residential momentum. New home construction in the area remains extremely limited, with data indicating only about 0.6% new supply in the last year. Such low levels of new housing can sometimes support price stability, but in a market already showing signs of weakness and low investor confidence, this minimal activity is more a signal of stagnation than of opportunity. Locations. Utility amenities such as the Emerald Airport, several state schools, and even CQ University's Emerald campus are spread across distances from 22 kilometres up to 57 kilometres. While these facilities serve a purpose, the long travel distances reduce immediate convenience for residents. This dispersion contributes to a sense of isolation that can further depress local demand and ultimately weigh on property values. When we break down the sale gradients, the numbers are hardly encouraging. A sale gradient close to 0.98 suggests that price movements are nearly flat, and the list of suburbs, while extensive, shows little indication of any emerging hotspots. In many cases, even the so-called best suburbs are struggling to achieve the momentum needed to deliver strong capital gains, reflecting the overall caution investors should exercise here. Employment in the region is heavily skewed toward mining, which accounts for 35% of jobs, followed by agriculture at 10% and education at 7%. The reliance on a few major sectors makes the area vulnerable to economic shifts, particularly as global commodity prices fluctuate. With an average income around $1,766 and exceptionally high average commute times, as high as 345 minutes according to recent estimates, the employment picture reinforces a narrative of limited diversification and potentially unsustainable growth. Population projections offer little hope for dramatic growth. If you found this analysis helpful, please subscribe to our channel so you never miss a critical update.